Well, I don't think there've ever really been a frothy top. I mean, there was a very brief moment when you could say that silver was a frothy top. Got up to what, sort of 37-ish, something like that. I mean, but really the reaction has been very, very minor from that frothy top. And the same with gold. I mean, gold sort of spiked up early one morning to 3,500, but I mean, it's just been moving sideways. And in these, as I was saying earlier, in these very quiet trading conditions, you would expect it to drift lower. I mean, I talk, if you like, as an ex-stockbroker, and I knew that in the case of any stock, and it's the same has got to be true of commodities, in the absence of buyers, prices go down. Now, here we are with gold, close to all-time highs. You've got no interest in the market. I mean, really very little retail interest, that is for sure, because everybody's just out there enjoying the weather. Or, and this is what I found as a stockbroker in the UK, I mean, it was so frustrating, the summer months, because there was I on the floor of the stock exchange or in my office trying to contact clients to find that my competitors had taken them out to Ascot, Henley, all the sporting facilities. I couldn't get onto anyone and get them to deal because they were already being, wined and dined by my competitors. So it's the same thing now. Nobody's interested. And you would think gold and silver would drift off, but no, they're not. I think part of the reason is the weakness in the dollar. I think you've got to look at the dollar from the foreigner's point of view, always. They own, in terms of dollars and underlying financial assets, including about, I suppose, 7.5 to 8, or no, it's about 7 trillion of bank deposits, figure like that. Total is just under 40 trillion, of which I think about 14.5 is in equities. I mean, this is a lot of stuff to be sitting on when the dollar's going down. And the dollar from President Trump's if you like, Liberation Day on April the 2nd, dollar's lost well over 10%. So where have you made up the currency loss on your underlying investments? Well, the answer is you basically haven't. You might have done a little bit, I suppose, if you'd sort of continue to invest in NASDAQ type stocks, the Magnificent Seven, because they've performed reasonably well. But you're buying into hot air. I mean, come on. It's, the idea that these stocks are value, if you like, that's just nonsense. If I was a foreigner, I would be, I'd really be reducing my positions, particularly when you get President Trump turning around and saying, the dollar should be lower. Okay, well, if it's going to go lower, that's not going to do me any good. And also President Trump turning around and slagging off Jay Powell. I mean, you begin to think, well, who's running things here? Right? Slagging off Jay Powell is actually a very bad thing to do. I'm not saying that I think Jay Powell is necessarily the most wonderful human on the planet. But, if you want stability in a currency, the last thing you do is start slagging off the guy who's actually running the most important institution providing that stability. He's doing the job to the best of his ability. And I would say he's actually been doing quite a good job, given if you like, the misconceptions that are around, Fed economists, because he's got to reflect the consensus, I guess. But I think he has actually been doing quite a good job. And to have a president turning around and saying, I'm going to sack this man as soon as I can and all the rest of it. If I'm a foreigner owning dollars, I don't think I want to own dollars anymore. And the point is, there's 40 trillion of these dollars held by foreigners like me. Why hold them? And particularly, I mean, if you're, let's say, a trading business as opposed to an investor, you hold dollars for international liquidity. I mean, you've got to go out and you've got to buy commodities and all the rest of it, and you get payments, and you're going to end up with some liquidity. You've got to have liquidity. But now that the global economy is turning down, and even though governments aren't admitting it, you probably see it in your own trade. seeing what's going on with shipping and all the rest of it. You got too many dollars. Sell them. It doesn't make any sense holding on to them. The problem is, what do you sell them for? Well, if you're a foreigner, and let's say you're, say a German manufacturer like a BMW or Mercedes or someone like that, then you account in euros. So anything out of euros becomes, if you like, a risk, a profit risk. So what you do is you may not like euros, but basically you've got to sell your foreign currencies and go back into euros. And that basically, I think, is what the dollar is suffering from at the moment. Particularly euros, yen also, but I think probably to a slightly lesser extent than euros. And when it comes to sterling, it hasn't really started in sterling yet. I really don't think it has. Well, that could be the next shoe to drop, I must say. Selling sterling for exactly the same reason, because sterling is overowned. And it's overowned because London is the international financial center in the European time zone. Banks, institutions, and all the rest of it have sterling. And I can't see for the life of me why they should. So that, I think, currency problems are going to be continuing, and I think they are probably still mounting. And under those circumstances, I really can't see any meaningful selling of gold or silver. And I would have thought that, if anything, gold and silver represent really pretty good bolt holes for those getting out of these risky currencies. Yeah. The story, obviously, with Bitcoin is that it's tomorrow's money or something. The point about my article is that it can't actually be money. A lot of the hodlers assume that you're going to get a complete collapse of fiat currencies. And under those circumstances, then, Bitcoin is going to be useful. But, there are two things that go against that. Firstly, governments don't collapse with their currencies. They may change, but they don't collapse. And their response basically is that as ever any threat from the private sector, they will jump on it. And here we have a private sector currency looking to supplant national currencies, government paper, government credit. They're not going to permit it. And governments, governments will change. Of course they will. But they will basically get more oppressive. And I think the idea that any challenge to them, they're going to jump on it. We even run this risk with gold. The difference is that gold is legal tender. It is legally money in all our laws. Bitcoin isn't. So I think that's the first thing. The second thing is that they assume that in this sort of anarchical, this system of complete collapse, there's going to be electricity to continue to for you to be able to charge your phone so that you can use them, if you like, for transactions and all the rest of it. That's not going to happen either. So, hopefully we don't have those conditions. But you can see that as a currency replacing current government credit in the form of their currencies, this actually is impractical from that point of view. The other point I was making is that I think that people who are promoting Bitcoin as the future of money don't actually understand the difference between money and credit. The whole way in which money and credit relate to each other is that you don't actually spend money. That sits in the background. Credit is what you spend. Credit is what is created on demand and is actually used in business and by consumers. Credit in the form of currencies, credit in the form of bank deposits, whatever. All that is credit. You need to tie that credit in terms of its value to money. And that is the whole point that we had in the past about gold standards. The point about a gold standard is that it is something which doesn't fluctuate. In terms of its purchasing power, it is relatively constant over long periods of time. Only if you have that can you have credit which is useful in the economy, credit circulating in the economy, so that businessmen, for example, can work out the profitability of a venture over time, and if they've got to borrow money, they know what they've got to repay in terms of value of what they produce and all the rest of it. Savers know that if they're going to save, that over a period of time, the purchasing power of their savings will be retained. This is the whole point. You don't actually go out and spend gold coins. It is the credit which is tied to it, which actually is the circulating currency, if you like. So that is the important point. Bitcoin cannot do this. Who on earth could possibly take out credit based on Bitcoin for any purpose whatsoever? For the very simple reason that you have no knowledge as to what the value of that is going to be, let's say after a year or 2 years or 3 years of a project. You can't even calculate what the project is going to produce for you. In other words, the idea of Bitcoin is it only works if there is no credit attached to it whatsoever. Then what you're doing is you're collapsing the economy. You're collapsing the economy so that it'll never recover to what we now know. And you're effectively going back to medieval times. It just doesn't work. It's as simple as that. So therefore, what is Bitcoin? Bitcoin is, it's interesting because in my article, I show how it correlates with NASDAQ. And also I found that CNBC does a MAG 7 index. And, it correlates absolutely beautifully with that. When the MAG 7 are up, Bitcoin are up. When the MAG 7 are down, Bitcoin are down. This is, if you like, a tech stock, which, with no trading risk, no business risk at all, but no assets and no profits. It's just a piece of, something in midair. Now, what this means is that if it correlates with, these very, very highly valued tech stocks, when the credit bubble bursts, which it's pretty much in the process of doing. It will be once we get the next rise in interest rates, next rise in bond yields in particular. Whatever the Fed does with the interest rates is a slightly separate thing, but bond yields. When you see the 10-year Treasury going up and beginning to look like it's going to go through the 5% yield level, this is going to kill equities, and it'll particularly kill the high flyers. We found this last time when NASDAQ collapsed. I can't remember whether it was in the year 2000. It certainly collapsed then, but also, I think particularly then. It lost something like 78% of its value after the dot-com bubble. So what's that going to do with Bitcoin? Bitcoin is just, one of these things with, or one of these MAG 7 pretending to be a MAG 7 when it's not actually anything at all. It's just going to evaporate. So anyway, that I think is the conclusion of my researches into it. It's really consistent, if you like, with the madness of crowds sort of thing. Where you get a real previous expansion of credit and matching debt. A lot of this goes into speculation. And this is just so much like previous, bubbles. It really is. And I think there was one company which, at the time of the South Sea bubble, here we're talking about 1720, was floated and actually raised money on the basis that, and its prospectus said that nobody is to know what the company will do. And it raised money on the basis of that. And I remember seeing something similar in the year 2000. We're there this time with Bitcoin. So this is not good news for hodlers And for those who sort of can't really make up their mind whether they should be holding gold or cryptos or whatever. I mean, look, just think it through, for goodness sake. This is, understand it. Understand what money is. If it cannot operate as money, it just cannot. If it cannot operate as money, then what is it? It's nothing. It's a volatile bomb. It's going to just go puff.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.